Does that look good?
You were able to live stream it?
See, so it's just up there we are, and I'm gonna throw it right with that. And I will throw it back to you.
Just triple checking. This is what people are going to see as they come in, right? Right now.
Correct.
Or-
People,
okay.
people are coming into the room, coming into checking in right now. So we have a few attendees here already. And for those of you attending, we are just settling in and getting everything ready. So bear with us. We'll be starting in about 10 minutes.
Paul, we might need to, I'm sorry, when we stopped the video, we turned off our rights to turn it back on.
Okay.
So I will quickly take care of that, and then you could,
You got it. I have just made you host. You
okay,
have that very valuable power again.
great. Okay, so let's see. Um, let's see if I can do this.
Of course, it's not simple because the button disappeared. Oh, there it is.
There, okay. Great. Okay.
Okay.
All right. So Paul, you will be host. Okay.
Thank you very much.
Okay, thank you.
And Graham, no need to, I'm not going to move you back to attendee because it won't let me, because I think you are the original host. It won't let me do that. So just hang loose here in the in the panelist room. For those of you who just dialed in, we're just getting set up right now. So hang tight and we'll be started in just a few minutes. Those of you just joined, we're just waiting for the rest of our panelists. So get comfortable, grab whatever your beverage of choice for the morning is, and we'll get started in a couple of minutes. Hey, Sean, I'm going to make you host real quick. That way you can turn your video on. And once you've turned it on, give me host privileges back, and then we'll be in good shape.
All right, there we are.
Here we go.
And
And if you can give me, there we go. Perfect. Hey, everybody, we're just waiting for Bill, and once he's here, we'll get this show on the road. How's everyone doing today?
Great.
Awesome.
Good day.
Fantastic.
how are things in your neck of the woods, Paul?
Good. Good. Looking forward to our discussion today.
Me too. Should be fun.
Totally.
You're both on the West Coast?
I'm in Buffalo, New York, actually. So yeah, East Coast here.
We're New Jersey, not too far.
I'm a New Jersey native.
Oh, yeah?
Nice.
Yeah, I come from Watchung, New Jersey. So right between Bridgewater and Short Hills Mall.
Of course.
Yeah, we're close to that.
We're
I
in
think.
Bloomfield.
Yeah, we live nearby.
Oh. Yeah, I have friends that just moved to Bloomfield, actually. Left the city and moved into Bloomfield with all the craziness going on, you know?
We get a lot of that ex-Brooklynites and Manhattanites move into our neck of the woods.
Yeah, exactly.
Including us, right?
Totally.
Just getting Bill in here. So give us just a moment.
Hi, I just joined. Sorry, I had two links. I was on the
No
wrong.
worries. We are glad you're here. We're gonna.
Yeah, you guys have to enable my video.
Yep. I have to give you host rights to do that. So I'm going to pass you the host rights. If you can pass it back once you turn your video on, we'll be good to go.
Okay. So here's my video, and then let me give you back. Make host. Change host. Okay, good.
Fantastic. How's everyone doing today?
Very
Really good, Paul. Glad to be
Good.
here.
Grateful to all you being here to talk, and even more grateful for those of you who are attending to watch the webinar. So we're starting a couple minutes late, but that's okay. We'll dive right in. So as we come up on the 4th of July weekend, we're seeing what an open COVID-free country has the potential to look like again. People are venturing outside of the home. Working from home is taking on a whole new meaning. Crowds and money to spend on things people didn't buy in 2020 are coming around. But the reality of it is this is an exciting and scary time for businesses looking to ramp up and take advantage of what could be an interesting post-pandemic period. With that, we've brought a group together to talk about the business of retail startups, particularly with regards to e-commerce and retail and what's needed to keep businesses sustainable. So with that, I'd like to introduce everybody. Saber and Eric, I'd love to just introduce yourself to the crowd today, and we'll go around the horn.
So I'm Saber Merkba,
I'm Eric Von Stein.
and our company is Bright Stripes. It's a toy company. We do primarily arts and crafts toys. So the DIY space is a very good space to be in right now, and it's what we love and have experience doing. So we're happy to have our own company now and be supported by Kickfurther.
So we're 2 years old, and we're already in a lot of national retailers. We're in toy and gift shops across the country, in Canada, and we're just so excited to pursue our dream company.
Great. We're going to be talking to you a lot about your company today, so get ready. Sean, tell us a little about yourself and Kickfurther.
Yeah, thank you. My name's John DeClercq. I'm the founder and CEO of Kickfurther. We are coming up on 7 years now as an organization. We incorporated in August of 2014. We help businesses solve the inventory funding problem that pretty much every single physical product company encounters. At some point, you get this opportunity to sell a lot of inventory all at once. And the next immediate question every entrepreneur asks themselves is, how do I fund it? Where's the capital going to come from? And we've identified this as a very specific pain point that we have a pretty, I think, unique solution for. And it's awesome being able to support entrepreneurs like Bright Stripes. And Bill has been an advisor and investor since, man, early 2016, and just been an important part of the journey the whole way.
Great, thanks, Sean. And Bill, with that great intro, I'm going to let you tell us a little about yourself and the crowd today.
Yeah, I'm a venture capitalist by trade now. I actually started as a semiconductor chip designer of all things, but I was in Silicon Valley in the 80s and then ended up going to venture capital in 1991. So I've been funding companies now for over 3 decades. Ranging from chip companies to comm equipment to network infrastructure, and then later kind of web and data science stuff. And the first backer of Zoom. And I love that you call this a Zoominar, not a Zoom webinar. Because I think that's the right term.
Well, I mean, it's one of those things that got us through the pandemic. I think we've realized its potential, and hopefully we've found a way to make it even more productive. Use Zoom for more productivity with today's session. Bill, I'm going to start things off with you. You mentioned Zoom, and you've invested in some big names back when they weren't big. I'd love to just sort of get your general perspective on the time right now. What are you seeing? What are you sensing? What are you feeling now that things are starting to open up? And what are you optimistic about?
Sure. I think if I've had when I have had breakout big successes, it's because I've managed to get in front of structural changes in markets where there's an ability for a new leader to emerge, and they're kind of on equal footing as any other company. And you look at Zoom as an example, since everybody knows the product. Video conferencing has been around for a long time, and it's a very, very big space. There was underlying the infrastructure, a structural change that no one really at the user level understood in the beginning, which was a move towards cloud infrastructure, which just made the ability to deliver high quality infinitely easier. And it made the infrastructure a lot more scalable. You couldn't have, in the old model, of all of the compression and handling of the video happening at your computer, trying to broadcast to like lots of other people. You couldn't have 20,000 people running off of your computer. Just wasn't possible. But now you can take a stream, stick it in the cloud, replicate it there, and it can go infinitely. So that little structural change allowed a new leader competing with Microsoft and Google and WebEx and Cisco and all that to emerge and become pervasive. So looking at structural changes in the market relative to Kickfurther, I think the things that I see are really 3 things. One is the rise of community-based businesses. And I think that's kind of an obvious thing when you think about it. But whether it's expressed in things like Roblox, or in kind of new currencies like Bitcoin, or what have you, there's a different way of approaching the building of businesses that is less about bringing a centralized product to market, but more about leveraging the interest and energy of communities at large. The second trend I think that is really important is not just from a moral standpoint, but in building a business, is the trend towards sustainability. And you mentioned sustainability in the opening, really about the sustenance of businesses going forward. It's not just that, it's the emergence of companies that stand for something. And I think, companies that stand for something good, it's become more and more important. And if you stand for something bad, you have a lot of shareholders voting against the management all the times you see with the big oil companies now. So companies that stand for good attract customers because there's, an emotional component to purchasing the product, and they can break out. Look at companies like Beyond Meat for example. You wouldn't have seen something like that 10 years ago. I think the last big thing that I think Kick Further is riding is really a total reconstruction of the finance industry. And that's become very obvious now too. If you take a young person that's under 15 to a bank branch, to them, it's like looking at a museum. They actually don't understand why the building exists. They look at their phone and say, why do you have to go there? Why can't you just use your phone? So I think the banks now, they've become so consolidated into, 6 or 7 major gigantic entities that it's become uneconomic for them to service most of America's businesses, or not just America, but all businesses generally. If you think about the overhead and the scale that those companies have now, the big banks, unless you're looking for a $25 million loan, they just don't want to bother with you, because the cost of servicing that loan with all the bodies and all of the empty buildings they have to pay for, they need to make hundreds of thousands of dollars per loan to make their businesses work. And with interest rates at, a point, how do they even make any money? They're going to lose a lot of money on any loan that's under 10 million bucks. So the vast majority of businesses are starved because they service them because they feel like they have to, and that if they don't, there's going to be a populist uprising against them, but they really don't want to. And I think businesses out there, whether or not the banker smiles at them and says that, they feel it. They just know that the overhead and the things they've got to go through, it's just not structured to service that part of the economy, which is the vast majority of the American economy. So I think Kick Further's in the right place where they can help, small businesses that have their own communities, that stand for something great, have access to capital in a way that's more than just money. I think the Kick Further, the beauty of the Kick Further mechanism is that you're involving your constituency to get support. And that's what I loved about this, company when I saw the idea, when it really was kind of a small little, I don't know how many people were at Kick Further at the time, but I could see it coming. And I thought, you know what? It's a 4 employees. I was like, this is going to work. I don't know when it's going to work, but I'm sure this is going to work if they execute okay. This is the right trend to be on. So I'll finish.
And what I want to, Bill, I want to go back to that community sustainability and total reconstruction of finance in a few minutes, but you gave a nice lead into Sean. And Sean, I'd like to talk a little bit about the importance of the funding Kick Further provides, and in the context of what you're seeing in the climate today, and what got you here to this point.
Yeah, absolutely. So just to touch on that community piece, because I think that's super interesting. One of the ideas behind Kick Further at the very beginning was I also saw that there was this structural change coming where increasing technology and automation was really changing the opportunity, I think, in the future for people to make labor income, right? And I saw that there's like 2 ways of making money, either capital income, which is what Kick Further does, what entrepreneurs like Bright Stripes are doing, which is you take something, some capital, you invest your time, your energy into making something, and then you sell it for more than what you put into it, right? And that's what we enable on Kick Further, is for anybody to participate and start to earn income against capital they already have, supporting great entrepreneurs like Bright Stripes and the others that we have on the platform. So that, at a high level, that was one of the things that got me super excited about Kick Further in the early days, was this idea that everyone should have access to these opportunities, which previously were really just in the domain of banks and like AR factoring firms. But prior to Kick Further, I was running a merchandising business, and I encountered the exact issue I described, and I'm sure that Bright Stripes went through, which is you get a purchase order and you have to decide, all right, I need to now pay my factory let's say 50% of what I'm eventually going to earn on this purchase order, and coming up with that cash, which can be hundreds of thousands of dollars to pay a manufacturer. When you don't have a track record or an extensive track record of success, when you're a relatively early company, my business was 2 years old at the time, is extremely challenging. And what we had available to us at the time was offers from AR Factors that were roughly a 5% discount on my purchase order, how much I was selling the inventory for per month. And having to fund for 90 days and losing 15% of my margin just for the cost of funding the production pretty much took my business from a growing, profitable enterprise to losing money on every order I had to fund through these funding partners. And so we encountered that issue. We talked to a lot of other product businesses, and every single product business had the same problem of, I have to pay my manufacturers before they're going to deliver the stuff that I get paid for selling. And it was interesting that every entrepreneur had a different solution, whether it was working with private equity that they had access to, they had a network, or, rich Uncle Joe that was willing to float them some cash to get their business running, or they were putting it on a personal credit card and they knew there was this cliff, when I have to fund more than 30 grand of inventory, I don't know what I'm going to do. And it was this palpable level of uncertainty of not having a unified, scalable inventory funding solution. Every vendor was feeling this pain. It just felt like there was a massive opportunity. So very, very soon thereafter, my sister ran a Kickstarter campaign and she raised $30,000 in a matter of weeks. No guarantee of delivery, it's all structured as a reward. And that just blew me away. And I said, wow, what if we could bring that community of this crowdfunding community that's willing to support the earliest of entrepreneurs? And what if we could connect them to business leaders and businesses like mine that have a track record of success that just need that support to continue growing, right? What if we could just take that crowdfunding and move it up the market a little bit? And that was kind of the idea. We went through the Boomtown Accelerator in 2014, did our first deal in November of 2014. And since then it's been, kind of up and to the right.
Nice. When did you realize in the process that you had something special that filled that niche you were trying to do and was able to really sort of move it forward?
Yeah, it's actually really corny, but I swear this is 100% true. So I got back from a vacation in 2013 actually, and I woke up the next morning and the idea came to me overnight in a dream. And I woke up with this idea fully coalesced. The first thing I did as I woke up was I texted my family chat and I said, I just got the idea that's going to make me rich and famous. It's almost verbatim that quote to my family chat. So I don't know. I felt from the very beginning that I had something that was pretty special.
Great. That's just unbelievable. That's wonderful. I want to take, but before I hand over, ask some questions to Eric and Saber, I just want to remind everybody, if you have any questions, please feel free to put them in the Q&A box. We're going to have some time for questions at the end, but we may dip into the question bag in the middle of the show as well. So feel free to write them down whenever you get inspired. What I'd like to do now is talk to Eric and Saber about Bright Stripes and how. A couple things, and I'll let you answer in whatever order makes sense. I'd love to know how you guys managed the pandemic, but I'd also love to hear about how you came to work with Kick Further, and at what point did you realize this was something that worked for you guys?
Well, we were basically in our first year of business. We had just had we were at the New York Toy Fair, which is the big international toy fair in 2019, and it was a huge success. We were featured. We got a couple of awards, and we were the orders that were written at that show were far exceeding what we had planned. And the Kick Further team actually approached us in our booth, and we were thinking, how, like you said, how are we going to fund this? because it's so much greater than we actually had anticipated having to pay for inventory on. And so when Kickfurther approached us, it seemed like such a novel concept. Like, well, okay, we don't have to go to the bank and prove that we've had X amount of years under our belts and X amount of revenue, because we hadn't, but we knew we had something good. We knew people were buying it. So that was the, we quickly, I think within a month, put together our first co-op with Kickfurther. We're on our fourth. It's been our go-to, and it's just been incredible. It's really kind of propelled our growth and our success.
Great. And Sean, how typical is Bright Stripes as a partner? What do you was there something about them that you saw, or something about them that's unique, or is it there's some common threads that you're seeing across your client base?
I think with Bright Stripes, it was look, I think we try to find amazing entrepreneurs in all categories, right? So I would say that every entrepreneur we launch on Kickfurther, I think, is an excellent, amazing, outstanding entrepreneur. And we have a very, very selective process in terms of who gets through. They can attest it is not the easiest process to get through the Kickfurther checklist scorecard. So we dig in there and we look for entrepreneurs that have really contained the risks and have some demonstration that they know the business that they're in, right? And we've got a 120 item scorecard that we run every entrepreneur through. And one of the things that I like is that it's very much a meritocracy. So it's all data based, data driven. There's no, I like Eric, so I'm going to get him like an extra point on the scorecard, right? So it's a full meritocracy, and I think that that's one of the things that's great. And the Bright Stripes story of finding us as a partner early on and then continuing to use us through their growth is pretty typical with Kickfurther, because they can attest there's not a ton of options when you've been in business for a year or just over a year, and you're trying to find a few $100,000 of inventory finance.
Okay. I know this Zoominar is titled The Post-Pandemic Entrepreneur, but I want to spend a little time talking about the pandemic and the period that we're just coming out of, and sort of a question to each of you. What are some of the lessons you've learned during the pandemic, and how do you feel that sets you up for the next stage we're going to go into? And to Sean and Bill, I'd ask a third question. What's going to be different? Actually, all four of you. What's going to be different now that we're emerging? So,
who's up first?
I think people are going to be focusing on their mental health and well-being, and we've been fortunate enough to be in an industry where we're supplying activity for kids, and so we've seen a huge boost in that industry, and we're so thankful to be able to give something back to people that really needed it. They needed to keep kids busy, and I think everyone really loves the creative energy that you get when you can make something yourself. So I think products that help restore your mental health and give you a vehicle for expression are some good areas that are kind of novel that people might not be thinking about. Obviously, having an online component is really important, making sure your channels are there, but also supporting local stores and the brick and mortar stores. Most of our businesses that purchase from us are actually independent gift and toy stores, and we love to see that, growing the community, growing the downtown, making it a special place to be. So that's what I have to say.
So what did you have? So when you were in the middle of the pandemic, clearly you were more e-commerce focused than your retailers. Has the pivot back, or pivot of bringing the brick and mortar retailers in been a challenge, or have you learned anything, or is there a new appreciation for your business mix now?
I think that our base is in that, and of course we are online. We have, many online channels, and we just see a resurgence in general in the economy. And I think we've people are feeling good and they're tuned into, like Saber said, these kind of enriching activities for their kids. And whether they're shopping online or shopping in their local store that's kind of catered to them throughout the pandemic and maybe knows their family, knows, what their kids are all about. But I think the new normal is that people are kind of interested in the kind of activities that we're doing, which is good for us. We're excited to be kind of in the arts and crafts and creative space and therapeutic arts space.
Were there any surprises that came out of the last year?
Everything was kind of a surprise.
Fair.
Very uncertain.
Fair.
Very uncertain. We really had to kind of pivot, talk directly to our sales reps and our retailers and really figure out what they were looking for. And I think
everything online, all of our materials, all trade shows stopped, right? So instead of
Yeah.
having that face-to-face, we
We're on
made video
Zoom.
presentations and Zooms, and
Yeah.
you do what you can, and made little sizzle videos for all of our products and made sure that our stores had that so they could support their own online stores. So we, definitely had to kind of do a big flip.
And I think that now we actually have a deeper connection to our customers in general because of things like Zoom and just, people shifted to digital as the way to reach people. And that's, that I don't see that going away, even with stores opening back up.
And you can tell your story in such a more rich and layered way online, which
Yeah.
is great. And then, it just helps everyone find each other. You find your tribe online.
Right. Okay. And Sean, the entrepreneurs that Kick Further have been working with, what were some of the surprises? What were some of the things that you saw over the last year that stuck out to you?
I think when the pandemic first came through, there was just this like big shock and everybody was super scared and like nobody really knew what was going to happen. And we made the decision as an organization that we were going to keep the platform running. So we said, look, people are going to keep buying stuff, right? Like pandemic or not, people are going to want stuff. Physical goods is like just so core to our experience, right? And so we made the decision to keep things running. We ended up funding less inventory in Q2 of last year because I think largely due to the CARES Act, which was great for a lot of entrepreneurs. So, I don't have anything bad to say about it, but we ended up funding less and it performed great. So that theory held up. And we saw, kind of as people were home and they weren't out at restaurants or going to movies or traveling, a lot of that spend shifted to e-commerce. So a lot of our industries, people that were worried about whether they were going to be able to sell at all, actually saw very significant lifts in their distribution to the tune of 20 or 30%. I remember this one cereal that was supposed to help you make you more regular grew something by like 700% when everybody was working from home because people started eating like garbage. And I guess that had like downstream effects for them. So it was pretty interesting to just see which companies did really, really well in the pandemic through e-commerce, and then which companies, kind of predictably didn't do so well. I couldn't have predicted that trading cards were going to go nuts in the pandemic, right? But they did. And some stuff like I think at-home sports equipment, that's going to stay hot. And I think that the behavioral trends that we observed, which is an adoption and a greater comfort with digital services, that's definitely good for Kick Further. And also a greater comfort with e-commerce, buying expensive big ticket items, and feeling comfortable with it. That's really permeated consumers, which didn't have that behavior as ingrained before. So I think those are two big trends I see. And then to what Eric and Saber were saying, I also think there's this interesting trend where because businesses have the ability to define their brands better through these online experiences, consumers are able to make better decisions. And I suspect that we'll see that this will accelerate the trend of consumer behavior towards adoption of products that have that environmental sustainability angle to them, and also the doing good and doing well, the angle that Bill talked about, and serving your community. And these like triple bottom line companies, I think, are going to become an increasing part of the conversation moving forward.
That actually leads nicely to the question I was going to ask Bill. Bill, going back to your community sustainability and total reconstruction of finance, were these trends that you were seeing before the pandemic, and then during the pandemic they were increased, or has that evolution changed at all?
Yeah, I think these were trends that were already starting, and the pandemic accelerated a lot of it. And I think, as everybody was speaking about earlier, the ability for newer brands that are emergent to communicate with their constituencies and customers has gone up a lot, in part because of Zoom. You're talking earlier, Eric, about, your Zoom webinars and all the Zoominars with your customers and all that. Now I think, and to Sean's point, the ability for a new emergent brand that stands for something to draw their customers in, to have an emotional attachment as opposed to just pure transactional attachment, or lack of attachment, I should say. It's totally changed the game. And it's interesting to see, like in the recent months, one of the most underperforming big tech stocks has been Amazon. And of course we all rely on Amazon, and they were growing like crazy and still are growing like crazy. And we will continue to depend on them. But I think, one of the things that they've done is sort of taken away that ability, because they're almost too big and centralized now. So I think and you're seeing things like the rise of Shopify, right? So entities that empower the world of many, many, many smaller players that make up this economy are starting to rise up faster now. And I think, to the earlier themes, it's kind of the ability for communities and micro communities to flourish has gone up a lot. The importance of those communities to people in the pandemic went up a lot. I think the companies, again, that stand for something, they're definitely, I think people sitting around at home wondering, like, wow, what is life really about? It's, increase the emphasis on sustainability. And I think the trend towards not really liking the banks, that was always in place, and that is pedal to the metal now. And with the rise of so many companies, whether it's Stripe or Square or Affirm, or the 50 companies that have come out and become worth billions, you're seeing what was fraying at the edges is now really just starting to come apart. So I think the banks are definitely in defensive mode now. And you even had Jamie Dimon the other day saying, whoa, we could have done Square, but we didn't, and so I think it's, I think there's this great awakening that, wow, like the world has changed and we were not changing with it, and don't know that culturally we can, so I think the acceptance, as Sean was saying, about everything online, people are really comfortable with that now, and used to be a little worried about these brands that you didn't, in finance category, these brands that you didn't know. Should I put my money there? Can I loan my money out through something I've never heard of? There was a little more hesitation. Now that's kind of, it's going away rapidly. So I think you're going to see acceleration of all the trends that were already in place.
Okay. I think that leads nicely into Sean. I want to talk to you about sort of when entrepreneurs should connect with companies like Kickfurther, and Bill, also sort of what's the trajectory? What's the order of where an entrepreneur should engage with various type of funding options, whether it's Kickfurther or venture capital or the banks? Is there a clear guideline or a clear lineation that an entrepreneur should go through, or is it sort of like one size doesn't fit all?
So I would say I always recommend entrepreneurs, get ahead of this issue. It will be something you have to deal with. If you have the kind of success you hope for, right? So, what you want to do is you want to understand what options you have and kind of know, how you can build towards those options theoretically. But in reality, what often happens with entrepreneurs is they're so busy building their business that they're worried about the problem that's directly in front of them on their plate, right? How do I get that order? not how do I fund that order if I get it. And so one of the things we've learned as Kickfurther is we have to be really good at moving very, very quickly to match the entrepreneurs where they are in their business life cycle. But it's never too early. I would say go out and speak to banks, speak to potential partners, find out from them what they need to see to qualify you to get you the funding you need to continue to grow your business. It's never too early to have that conversation.
Bill, any thoughts?
Yeah, I think, it's so there's many different categories of supply of capital, and there's a lot of nuances between the different parts. I think venture capital, specifically the venture capitalists that are working with funds and all that stuff, they have an unusual set of hurdles around working in a category where the exits take a really long time, 8 to 10 years minimum, sometimes 15. And the dynamic across small companies is that, most of them don't make it, so the failure rate's going to be, it's hard to know, but 70, 80, 90% of the companies are eventually not going to make it or never get liquid. So the very few that make it have to be so big that they make up for all of the other losses. And so the tendency of the venture community is to only fund things where if it works, it's worth billions of dollars. And so that by itself rules out many of the small businesses. So I think it's kind of, venture capital is going to be appropriate for teams that are building something foundational that can be structurally important, that, worth billions and billions of dollars someday in the outside shot that it works. The bank lending, banks are so conservative that you've got to be at a point where you're so big and have enough cash flow that there's no risk. If there's zero risk, then you'll get all the money you want in a loan. You're going to pay for it. And the fees, it's deceptive because the interest rates look low, but if you work in all the fees and all the other stuff, the cost of the bank is actually a lot higher than it looks. So I think, one of the emergent ways, and which is why I was willing to put venture money into Kickfurther, is, if you can work with a constituency that cares rather than is just trying to make money off of you, you hopefully are going to get either better rates or a constituency that amplifies what you are doing to the others. And I think, one of the most unused parts of the Kickfurther ecosystem is leveraging the customers for sales. And I think over time, I have a feeling that's going to become more emergent, where the lenders, because they are your customers, they are cheering for you and hoping to spread the word. And hopefully that results in, quicker or better sales so that the capital becomes de-risked in a different way. But I think that's how I see Kickfurther's position in that array of, venture, bank, or Kickfurther.
Thanks, Bill. Eric and Sarah, I want to ask, I want to get your reaction to what both these guys said, and also as a follow-up, talk a little bit about your supporters, the people who are passionate about Bright Stripes, and how they've motivated you, driven you, and gotten to where you are today.
Sure. Well, I'll start off and Saber can finish, but we were so grateful that something like Kickfurther existed, because there's a bunch of huge companies in the toy industry, and it becomes almost impossible to kind of break in if you have to rely on traditional funding structures. And we were, I think there's like a democratization happening where, people with good ideas, with integrity, with the mission-driven kind of products can resonate with consumers. And if they can get off the ground and start selling products, and they're on their way, and we're, so I think this has just been, it's like the things like Kickfurther have enabled us to kind of create the kind of brand that we have created, which is not how brands I think were created in the past.
Yeah, personally, in our business, we've leveraged all of our experience in the past of being in this industry and all the relationships we've had in sales and manufacturing. And so the entire structure of our business is really built on these really strong relationships. And so having Kick Further be a kind of a community supported, community stamp of approval, everyone's looking at the same set of data, like Sean says, and then you arrive at this conclusion, yes, I want to support this business. It's huge for us. And it really kind of fit conceptually with what our business had been all along. So it's great that it's an option because, again, if you're going through the traditional routes, they're not even going to look at you. And finally, we're, you know, a whole 2 years in, we went back to our bank, and what they're able to offer us is so small to what we need that they even said it's not worth the bother to apply. So
Yeah.
it's really
I mean,
quite useless.
right. Meanwhile, our revenue has tripled year over year. So we've
They're
just,
not able to
you
keep up
know,
with us.
it's like they won't look at that, but they'll look at your trailing, you know, the first year taxes or whatever. So
Yeah.
anyway, it's just, yeah, we're in a good time for people to pursue their passions.
Yeah, and so you raise an interesting point. I'd love to get Sean and Bill's take, at least for the next 6 months to a year. Where's the money? Where's the money going to come from? Is it going to come from the banks? Is it going to kind of come from VC investments, or you know, sort of where you know, Sean, you've seen it with Kick Further as well. I mean, where are the opportunities for entrepreneurs over the next year?
I would say, you know, we are seeing good uptake on our community growth, and we're seeing that we now have a couple of family offices that are coming in to participate on the platform. So to me, it seems like capital does seem to be active again. VC seems active. The family offices we're talking with are excited to participate on the platform. And this is not my area of expertise, but as I understand it, like rates are low in other places, which makes the profit that you can earn by funding inventory more attractive to a lot of people. So that's like a super simple take on it. Bill can probably speak much more intelligently to the topic.
Yeah, you know, back to that framework I, you know, kind of laid out, VC banks or Kick Further. I think the capital will come depending on where you are in your cycle. VC is a funny thing too, because a little bit like the banks, there's multiple tiers. There's early stage and late stage. And if you're at a point where the business is clearly inflecting, there's such a herd mentality that the valuations get pushed up to these crazy levels where, you know, money comes in at multi-billion-dollar valuations, and there's plenty of it. You know, it's insatiable because interest rates are low and the exit markets have been good on the public stock market. But if you're an early stage company, it's like the capital doesn't exist, you know. So it's like there's a desert and you're wandering around in the hot sun through sand with no water, looking for that oasis, you know. But if you hit that wellspring, then there's like Niagara Falls falling in the one spot, but you can't get in because there's a big fence. And so I think, and the banks, you know, we talked about that already. You know, they're not only are they behind, they are always looking backwards, not forwards. So, you know, for Bright Stripes, they're looking at your tax return from 2 years ago. Yeah. How relevant is that for next year? But that's the basis upon which they're making their decisions. You know, so that tells you something about, okay, are you going to run you know, $100 billion balance sheet with all of the data, not on what you think will happen, but on what happened 2 years ago. Okay, so they're basically making their decisions on placing hundreds of billions of dollars of capital on what happened the year before COVID.
Right.
You know, I wouldn't want to run a business like that, but some people somehow are able to do that, but not me.
Thank goodness there are forward-thinking organizations out there, right?
Yes, indeed. Before I open up the questions to the audience, we've got one waiting in the wings, which we'll get to in just a minute. I wanted to ask Sean, is there any piece of advice that you would like to give to entrepreneurs today who are thinking about connecting with Kick Further or thinking about inventory funding in a way that they hadn't thought about before?
I would say, you know, reach out, connect. There's no cost to it. And I think, it's like there's a lot of times I think entrepreneurs can get stuck in analysis paralysis and they get in their own heads a little bit. And it's like, sometimes you just take that first step and it's easier than you think it might be. Right. So I think, we talked about how the process is relatively extensive. We have to have it that way, but it's also not as painful as I probably described it, so it's very manageable. And reach out, have a conversation, see where you are and see where we can help get you.
Great. Well, thank you. Eric and Saber, what are you guys looking forward to in the next few months? This is shameless plug time. I'd like to hear about what you guys have in the pipeline and what's ahead for you guys.
Well, we've partnered with an organization called Art Feeds. We have an art supply line which features premium materials at a great cost, and it also helps fund their organization, which supplies art tutorials and education to underfunded kids in the U.S. And we have a few great products that we partnered with them to develop the curriculum that's going inside these art journals that are very timely. We poured our hearts and souls into these.
So we're product developers at heart, and so we just love developing products and finding those perfect niche products like the art journals. So we came out with 10 new items just in the last, just for fall launch. So it's pretty aggressive for a young company. We have over 100 products, so there's something for every kid at every age level.
Yeah.
And it's something to get creative with, and it's just something that we don't think is going to go away. I think the COVID moment kind of got people tapped into that, but once you have that feeling and that outlet, you're not going to want to let it go, and it's something that we hope lasts a lifetime. So
Great, fantastic. And Bill, I'd get in serious trouble with a lot of people if I didn't ask you. What are you excited about right now? What's the next big thing on your wish list, or what do you got your eye on?
I guess the broad trend is I'll use a little bit of kind of a little technical terms, I guess, but I'd say virtualization and data science. And what do I mean by that? I think we're in an era now where everything physical is being represented by a digital twin, kind of where there's, even us, here we are on Zoom. It's not really me in the room with you, but it's a representation of me that's digital. And so I think you're seeing a liquefaction of the economy in a way with the expression of things digitally becoming pervasive. And because of the digital representation, there's a way to basically connect that item to a context-aware cloud. Okay, so that allows, Kickfurther is kind of an expression of that, right? If Kickfurther existed only in a physical world, where you had to go and just look at the inventory all the time and try to take a bucket and consignment, set it up in a store, you couldn't do that, right? But the ability to represent everything digitally and sort of parcel out pieces and then secure it, and it's not a security, but sort of securitize that in a way, spread the risk across things. It's become a lot easier because of digital techniques, and that's allowing the existence of things like Kickfurther. It's only one expression of many, many, many things. So, and you're seeing things that aren't obviously connected to that trend, but what is this trend in Bitcoin or cryptocurrencies? What is the trend in NFTs? What are the general trends around data science, which is the other part of it? You've got the digitization of everything physical at the endpoints, but then you have the context-aware cloud in the back that allows greater efficiency and greater reach to all things that are in that knowledge base. So I think that's just changing really everything. That's what's happening to the banks. The banks are getting disemboweled and disintermediated from the inside out because of the context awareness of the currency asset at the endpoints. And it's happening to everything in supply chain. It's going to revolutionize, I think, how the medical industry handles everything from its billing to its records. Because now instead of the records sitting there on a piece of paper in a stack inside a cabinet, it's a living and it's attached to a cloud that is connected to everything else. So the ability to see trends and patterns and be more predictive is just starting to happen in every industry in the world right now. So I think if you take the old economy and the new economy in 10-year periods looking back, 10-year periods looking forward, it's hard to see it. You know, it's so big. It's kind of like what happened to Amazon and retail is going to happen to everything at bigger scale. So I don't even know what that means other than there's massive opportunity out there and people just don't see it.
I feel like we need to cut this last minute and Sean, you need to show it to all the Kick Further entrepreneurs and share this with them. I think that's great advice and insight. We've got one question from the audience right now. It's from Sabrina, and I think Sean and Eric and Saber, you might be the best ones to answer this. The question is, what happens to a small business that gets a large purchase order post-pandemic, but the revenue numbers during the COVID period were decimated and don't meet the usual requirements to support their funding request?
Yeah, so that would be like typical, I would imagine like a travel or a luggage company is probably in that situation, right? Because those industries are like opening up now and they got destroyed during the pandemic. That's a very tough one for Kick Further to operate with. Just to be frank, you know, we do operate, we have to look at trailing 12 months revenue. Every business has to have some kind of heuristic, which you make judgments off of. And that's one of the lines in sand. So, you know, what I would say is, for us, we can build back a business like that very quickly. So regardless of what you're able to drive during the pandemic, we can help fund against that revenue and we can help you build the business back. But that contraction during the pandemic would be reflected in how much funding you're able to secure on the Kick Further platform.
Great.
Small with a small campaign, which leveraged us to get to the next stage so we could get more capital, which pulled us to the next stage. So every co-op we had grew in size because we were able to support that with our revenue. So you can start small and then hope that that helps you grow.
You really just have to hustle. Sales, whatever means, you know, it's a hustle. You gotta be super nimble and super tuned into the market and where you could expand to retailers you may not have thought of.
Saber and Eric, while you got the mic, we've got another question and it's directed to you. Saber and Eric, you mentioned selling on consignment with Kick Further. Did that limit your ability to sell as you wanted?
No, not at all. So what happens is you maybe purchase a container of goods, and a certain portion of that you use to fund this co-op. So you can purchase as much goods as you want, and it helps you to get all the funding that you need. Once you sell the goods, you pay back Kick Further based upon those pieces that are sold. So it kind of is a flexible system in that way. So you can sell it wherever you like, you know, with your existing sales channels. And hopefully the campaign in and of itself is a marketing tool that you can use to reach a broader audience, get more fans to your brand, and it really just helps you sell. It's pretty simple.
Yeah.
It's a great system. Even I could follow it.
That's smart. Kids.
I realized I asked Team Bright Stripes and I asked Bill what you're excited about for the year ahead, and Sean, I didn't ask you, so I want to. I'll give you the final question. What are you excited about for the next few months ahead?
We have our biggest season coming up. So Q3, everybody's funding inventory for the holidays. So, you know, we're looking at a couple of pretty interesting integrations. Probably one of the things that I'm most excited about is we're developing a supply chain management app for entrepreneurs to, Eric and Saber are just pros at product management, but a lot of entrepreneurs could use some support. It's one of the areas that we've identified where we can lean in as an organization to help entrepreneurs manage their supply chains better, which then has follow-on effects for pretty much the rest of their business. So that will be hopefully going live in the next couple of weeks as a beta, and we want to iterate and really get that tuned in the next year to just continue to support this entrepreneur community that I think is so important.
Nice. Thank you, Sean. And thank you all for being a part of this Zoominar today. We covered a lot of ground, and to those of you who are watching right now, thank you for tuning in. We hope you got a little bit out of it. We're going to do an edited version of this. We'll share it with you online. But if you have any questions, I think you probably got everyone's details either on Twitter or LinkedIn, and we're happy to keep the dialogue going after we hit the stop button on the Zoom session. But with that, I'd like to wish you all the best and thank you all for being a part of this today.
Thank you so much.
Thanks, Paul. Have a great one. Thanks, everyone.
Thank you.
Thanks, everybody.
All right.
Thank you, folks. Bye, everybody.